Hi, everyone. I'm Maggie Lake, and I'm talking markets today with Tony Greer, editor of the Morning Navigator newsletter and co-host of the Macro Dirt podcast. Hey, Tony.
Hello, Mag. How are you?
I'm doing good. I'm doing good. It's good to be back. I missed everyone.
Totally. I love the intro that you built for the Maggie show. It's awesome.
Thank you. Thank you. And gosh, it's been a busy summer. You and I launched two kids off to college,
Yeah,
which was huge. And it's no surprise we're talking money because we need some. If anyone
right.
else is in the same position, you know what we're talking about.
Totally.
And gosh, September really is living up to its expectation. As I said on Twitter, came in like a Mack truck. We saw a wave of equity selling make its way around the globe. U.S. stocks tried to recover earlier in the session today, but looks like the sellers came back in the afternoon. Nothing like the losses or selling we saw Tuesday, but still down. How are you feeling about this market action we're seeing?
There's a changing of the guard going on, isn't there? You know, we for the first 3 quarters of the year, we watched the market chase artificial intelligence up the flagpole, right? We bought Nvidia up to 140 bucks. Last sale 105, right? That bubble is sort of unwinding a bit. It definitely got over its skis sentiment wise, with Jensen Wang signing boobs in the beginning of June with the stock at $140. And what's amazing about that is, for a couple of weeks, the stock hung in there and you're like, wow, maybe that wasn't even you can't even stop Nvidia with that kind of a sentiment, signal. And as it turns out, a couple of weeks later, Mr. Market says, oh, yes, we can. And it's going to be via a trip to 90 and then a trip back to 130 where we consolidated for 2 weeks and left a giant bull trap. And that's what you see unwinding now. And to clarify the bull trap, that is when a bull market security makes another run at the highs and fails and consolidates in what should be breakout territory and then gives it all back and fails in short order. And that's an obvious bull trap. And it seems like we're still working that bull trap off. And, so what we're buying now is we're buying toilet paper and Colgate Palmolive dishwashing liquid and Philip Morris Zinn pouches. And, XLP is up 20% on the year. These stocks are, XLP is up like 6% on the year. But a lot of the underlying stocks are just lifting off. And that's where the money's going this time around. So what we're seeing is, we've got this Fed policy stance change, right? They've gone dovish. We're expecting rate cuts. The market knows what it's getting. And it's pretty much a little bit of a sell the fact event with the rate cuts, right? The market bubbled up to the highs several times. We bought tech up to the highs again. Every time the rates carved their lows, weak economic data, that whole cocktail. And what we've got that's most important is the yield curve is steepening, right? So the steepening of the yield curve causes people to buy protection on their portfolio for the change in Fed stance, VIX rally, stocks sell off. And I feel like that's what we're doing now. So we're going to do a back and fill into the moving averages, and then we'll see. I would imagine that the Fed is going to do a good job of managing expectations, as markets move off and things like that. What I'm concerned about, quite honestly, is if the Fed stays on this easing posture, that we're going to have another bout with headline inflation at some point. It just doesn't seem feasible that they were able to talk the commodity markets down. We're going to go on this big rate cut path, and they're going to go down and stay down, and the economy is somehow going to improve or explode. So it's going to be a tricky maneuver, but I feel like the S&P is still doing a pretty good job sorting out winners and losers. Yesterday was a big confirmation that we do have like a slide in motion. We had about 8 major sectors with 2 sigma slides, right? There was a mix of cyclicals and technical names. There was XME, so industrial miners, aerospace and defense, uranium, oil services, semiconductors, all with 2 sigma losses yesterday, right? And when you have tech and cyclicals backing off like that, the S&P has a little bit of a problem. So there's that flight to safety in consumer staples, but the rest of the tape gets clocked because all the big cap stocks or the Mag 7s are the ones that are backing off. So I think that we're going to see a pullback that's going to continue into this fall in the NASDAQ, probably NASDAQ-led, semiconductor-led, NVIDIA-led. And we're going to see where that shakes out on the downside. It's probably going to coincide with the S&P dipping into support, with everybody getting negative, and then, we'll have a capitulation trade at that level too. So I'm
Yeah.
kind of just sitting here like looking for my breakout opportunities and playing with short time frames. And I'm still really at the $5 blackjack table, Maggie, in the markets. You know, I'm still kind of breaking out of summer mode. I haven't seen anything that I'm going to really go big on yet. In the fall, you know, other than kind of getting out of the stock market's way, advising people to get out of Nvidia's way if they haven't already.
Yeah.
And so far, everybody's happy. We're just looking for a better opportunity right now.
Yeah. So much good stuff in there, Tony. I have so many questions. But I love when you say that because you just said two really important things. And one of them is time frame, right? Like we're going to talk about stuff now, but you're talking about it in a very short time frame because you're sort of looking for things to line up. So I think that's really important to put an underscore on because people tend to hang on to something and we'll share some clips about something. But, you know, if you don't hear that time frame part, you know, that you're missing everything.
Yeah, well,
So
you know, Maggie, I want to key in on that because you make a great observation. So to really drill down into what that means, you know, it means that the market is going to struggle like from here. You know, like you're not going to be able to buy a sector and it's just going to be off and gone, and you're going to be able to kick back and fold your arms behind your head and just watch it trend. Right? We are not in that phase of the market. So you play your breakout, you play your pressure point, and then when you've got a profit, you make a sale and you look for the next one. Right? We do not have endlessly trending markets on our hands. We have a market that's struggling at the highs. Sentiment is way over its bullish skis right now. CNN Fear and Greed is at like 65 greed. The AAII bull index on Bloomberg is 51, which is still super elevated at the top of the range. People, I mean, we just had a bull with laser eyes as the cover graphic of a Wall Street Journal article entitled, I think it was Americans Are Really, Really Bullish on the Stock Market.
this surprises me because that was a really distressing kind of, you know, puke we had in the middle of the summer. I mean, so for those of you who were happily sitting on a beach someplace, I don't know if anybody got to do that. I know we didn't, but if you were, there was this really big wobble in the middle of the summer and people were kind of freaking out, and you sold all of your tech positions before that happened. So we got together a couple times this summer when you know, I was testing things out and also then couldn't not talk to you because of what was going on. And we happened to get together on a day where you just saw stuff and you got out of all of your tech positions, which surprised me. And we talked about why, and then you nailed it because after that we had that big thing. Now it came back, but I'm surprised given that it was a little shot across the bow, or actually a big one. Had people talking about the unwinding of the yen carry trade. There were all these sort of big macro things people were talking about. Are you surprised that everything still seems like it's ringing so bullish given that warning sign from the market?
Well, that's a great observation, Maggie, right? We had the trifecta sell-off over the summer, right? Yen carry trade, Nvidia bubble unwind, beginning of it, and the curve steepening that the VIX is going to react to, right? So we had all three of those things going on at once. We had the S&P absolutely dumped moving average support, and then we had the fastest paced 10% rally in stocks that I think that the stock market has ever seen, ever. So that moved from 5,100 to 5,700, and that move from 90 in Nvidia to 130. That reels in a whole lot of new bulls into the market. They say, oh, I just saw that spike was steep in price, short in duration. Let's get the bullhorns on again and let's go, right? And what they're not paying attention to is that the curve is steepening in change to the Fed policy change. The Nvidia bubble is clearly getting cleared out, and the curve is steepening up into positive territory now. And that's not an environment that I think that you should be long stocks in at all. You know, so I advised everybody to get flat. We're trying to pick around in the commodity complex that I think hard assets are going to see some of the flow. Obviously, I'm a little bit wrong because consumer staples is where all the flow is going. So I totally whiffed so far on that trade. But we'll see what happens over time. If tech gets killed and rates keep falling, I think we're going to be in a little bit of a better environment for hard assets and commodity prices. So that's what I'm looking at right now. Along the BCOM, the Bloomberg Commodities Index, kind of just playing it off of this bottom, and we're going to see what happens.
Yeah. So let me also another thing we totally respect you for, Tony, is you say when you get it right, and you've gotten it really right a lot this year, and I'm always going to flag that because it's been tremendous. But you also are the first to say, the timing's off, or I'm whiffing on that, and living to fight another day, which I think is so important and super admirable. So let me ask you something about the Nvidia now. So there are people who inevitably have been I know we all are, right? So many people hold Nvidia in their 401s or retirements or portfolio, and all everybody thinks about is, God, should I lighten up? Should I lighten up? Should I buy if there's a dip? How am I feeling about this? Is this the next juggernaut stock for the rest of our lives, or is this AI hype played out? How should people be approaching this? Because let's say you don't have a super short-term view on this. If you didn't lighten up now, how you must get tons of questions about this in your Slack. How do you walk people through how to approach something that's been such a winner, but now we seem to be in this uncertain territory?
Man, that's a great question. I do get it a lot, and I kind of advise everybody, there's no easy way out of this, right? You got to manage the risk. Do I think that Nvidia, is going to be a stock that's with us for a long time? And, would I bet my life that it doesn't make a higher high one day? No, I wouldn't. But I'm going to tell you that for the short term, we've seen everything about a bubble stock play out with Nvidia. We've seen the astronomical valuation. We are seeing it leapfrog. We're seeing the market cap of Nvidia leapfrog the GDP of France. Right? That's usually where the market gods wake up and say, whoa, 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 this is actually a big level here. Does it make sense that Nvidia is bigger than the market cap of France, approaching the market cap of Japan and that kind of thing? Probably not. It's probably an anomaly that the markets will sort out. So I still think that there's a lot to come out of this Nvidia bubble. And, I don't know how AI is going to develop, but if this rings similar to the dot-com bubble, what happens is you see the stocks peak very, very reluctantly, like Nvidia has, because it just won't stop testing the 130 highs, right? I mean, the stock is at 106 right now, and literally in the last month, it's only been below 120 for 7 sessions. You know what I mean? So the stock, they just want to buy the thing, right? So we've got to wear all of that off. And I still think that it's going to have to break its 200-day moving average at $90 on the downside and go for a spill through there. That's what the bull trap creates. It doesn't create this little tiny pullback to the next moving average. At the next moving averages, these guys that are all trapped up here long are saying, I wonder what I should do. And then they get down to the 200-day moving average and they say, this is a good spot to double down. And then institutional flow gets a bad news headline and says, oh, you're doubling down here? Whag, yours. And then the stock doesn't come back from that for a while. So that's what I think has to happen. I think Nvidia's got to trade down to 75 and get washed out. And then from there, I don't really know. I would imagine that a steep dip is going to get bought because of the muscle memory reflex in the stock. But we are just getting to the phase now. Nvidia was having very specific U-shaped ranges every day, where it would come in kind of bid, it would dip into the previous day's range and then run, right? For the last couple sessions, it has been failing rallies and making lower highs intraday and making a lower high and shitting the bed into the last 2 hours. So that's different behavior. If you're a holder of that stock and you haven't noticed that change in behavior, man, you might be in for a little bit of pain in the short term, because I think that behavior is just telling you, yeah, we're running the test of new high mode anymore. We're actually getting people out. Right? We're getting insiders are selling. The people that bought from all the insiders selling at $130 now have to get out. And so we're playing a little bit of hot potato, and we'll see how that shakes out. But I do very much believe that Nvidia is sucking a lot of oxygen out of the markets and is kind of the centerpiece fulcrum for how the rest of the market is really behaving in some sense. Not a one-to-one correlation.
Yeah.
But they are very, very related right now.
Yeah, which is interesting. So does it feel, because I know you're looking around at what you might be interested in. Does it feel like this is a rotation, a stock rotation, that it may be taking a little bit to play out? You mentioned consumer staples are in favor, but there seems to be a nervousness when Nvidia goes down. It tends to take sentiment for the whole market with it. Does it feel like a rotation, or does it feel like there's something more serious going on kind of globally. We mentioned that yen carry trade. A lot of people talking about Japan. There's all these sort of bigger macro things. Andy
Yeah.
Constant, if you don't follow him, Damp Spring laid out a great 4 point, all of these different choices. If you feel this, 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 and this. And so there's some big macro themes in there as well. Does it feel like we got to be careful that this might be just more about than just a rotation? Or does it feel like once we get the Nvidia stress out of the way, it could be time for other parts of the market to finally get some love?
Well, I think it is still a rotation. Like I'm not throwing in the towel on the entire S&P just yet. I just think that it's got to go down first. I can remain bullish and be patient and watch the price go down because that's okay as a bull, right? As long as I'm not in the way losing money on the way down, I can watch it go down and be patient, right? So I think that there's a rotation going on, but because Nvidia is weighing down the Mag 7 and the Nasdaq 100 and the most heavily weighted stocks in the market, net we're causing the S&P to back off, right? We may see how sectors like utilities, uranium, aerospace and defense, so cyclical sectors like that, excuse me, have gained ground on semiconductors in terms of year-to-date performance, right? Semiconductors backed off. These stocks, the cyclicals, all came out of the up single-digit percentages or flat on the year and woke up because that's where the money went. But the problem is when Nvidia, Tesla, Microsoft, Google, Amazon, and Meta go down in the same day, it's very difficult for the rest of the tape to hold up, right? Because the S&P is just a big negative item,
Yeah.
because of the consumer discretionary names where all the big tech stocks are buried. So,
Yeah.
I think that's what leads to the indices backing off is Mag 7 actually backing off. I mean, we talked about it or the whole way up was, Mag 7, it's too much, it's too much, it's too much. Now Mag 7's backing off, and everybody forgot to say, yeah, that's why the market's backing off.
Yeah,
Mag 7,
exactly.
yeah, it's backing off, right? Just like everybody was complaining about at the highs, they're now finally backing off. That seems normal. And then I think, I don't know how this is going to shake out. My sense is that they're going to continue to struggle for a while until we figure out this rate path. I think cyclicals might wake up because they've been cheap and we're trying to address this economy issue. So if we address the economy issue now, for me, better data means buy cyclicals. And so that's kind of that's what I'm looking at, Maggie. And I'm still, the difference between me when I'm like in a position and in a 4-point stance and when I'm really doing way more observing and spectating than I am trading,
Yeah.
right now.
Hey,
And I'm
both are
being very
important,
patient.
right? That's it. Like, we talk about this when we talk to Denise and a lot of other people. You don't always have to be in action doing something. Sometimes that's what kills, a great performance is because people are just forcing something that's not there.
Yeah, we were in a cherry S&P trade for 10 months, made 1,000 points, and it was exhausting. And so now that that's over, it's like, let's get our sea legs back. Let's get back in
Yeah.
shape, fighting shape, and we'll go in and take a piece out of something else next.
Yeah. And you're flagging all these great themes that we're going to be talking about in coming days. What does diversification look like? So by the way, if you're not overloaded on Mag 7, right, then you're not feeling as stressed out as everybody else. So, there's a reason that you do that. What does that mean? Are bonds back in the mix? Super interesting. I'm going to ask you about that in a second. And you mentioned defense. I'm just going to flag, guys. I'm doing a really, really interesting conversation with a person who specializes in defense. And what defense looks like today. Defense, I'm talking like national defense, right? Those kind of stocks. Super interesting, been out of favor, even though we are at a situation where there's a lot of geopolitical uncertainty. So I'm super excited about that conversation. I'll get you more info on that. I'm looking in the chat, which I'm going to do in real time now. But I love it. Somebody, Jal saying Tony Stark back. I love to see it. he is a superhero. He certainly has been this year.
You guys are too
He has
kind to me.
part of that skill as well. And we do have some questions as well. And it's so great to see everyone, some regular faces. Thanks so much for rolling up, guys. Christopher and Ched. In fact, I always say Ched, whatever. However, one of these days you're gonna message me and tell me exactly how you want me to pronounce that. But he's asking, what does Tony think about the fact that apparently liquidity is coming back? Plus, after rate cuts, all that money in the money markets may rush to equities. You thinking about those kind of flows? Because we do have this Fed meeting coming up, and feels like the market got super aggressive about expectations.
Yeah, I'm a definite disciple of Michael Howell, and I try to listen to pretty much everything that he puts out because that liquidity story has really been such an unbelievable I guess arrow to have in your quiver trading this
Yeah.
market. So you like to keep your ear on Michael. And it does sound like we are in for periods of like rising liquidity. It doesn't shock me given, we're heading into an election. I got a feeling that that is to combat what the market is swimming upstream against. I have a feeling that that may be that the central banks are providing more liquidity because they see the curve steepening. They see the equity markets wobbling. They see the big disco ball and Nvidia backing way off the highs, and they realize that we got to keep liquidity coming. If we totally withdraw it, the tape is going to fall apart. So I got a feeling, that the liquidity has different roles. When the market's trending and running and the liquidity is high, then you're in that market where you can sit back and watch it run.
Mm.
But we've gotten into the situation where, because of the change in rate stance, because of the weaker economic data, the S&P is sort of changing leadership baton and going through a couple of points of stress right now. So it's a little bit difficult to see what's going to shake out as the leaders after this. But I don't know. I think the market is going to be in pretty good shape. I'm not sure if I got away from the question too far
No, you didn't.
about
Never. This is
liquidity, but
this is what
like
we
I think,
do. We just chat.
yeah, I think
Yeah.
liquidity is kind of like swimming upstream against the curve steepening,
Yeah.
against more carry unwind, against the Nvidia sell off. So that's how I'm looking at it.
And that exactly the point I was making before, Tony, is that there seems like there are a lot of forces at work. There always
Yeah.
are in the markets, but a lot of them are sort of, maybe pushing against each other. And, what's going to be dominant, it's hard to tell, which is why we have to pay attention to all of this, right? It's
Yeah.
not set and forget. You made that point before. We can't just sit back and watch a trend. This certainly seems like the volatility is going to pick up. I want to ask you about oil. We saw that oil prices down sharply. It's sort of interesting because you had stocks down, oil down, gold down. Yeah, a lot of things down. What's happening with oil? Is it supply, demand, both?
Yeah, OPEC is pissing on the entire oil parade. It sounds like, I've got it on my radar screen in terms of, I'm watching it the way Jared is, right? I've been an energy bull. Oil's now, like, we're both looking for this to be like the dry heave in commodities, meaning like the last gasp lower. And I hope that's the case because, Jared and I have been talking. Obviously, we do the podcast together. He wrote a great bullish energy note talking about the coming bull market in energy yesterday. And he flagged a few things like, crude oil, total liquid supplies are at historic lows. Exxon and OPEC have both flagged that story as a shortage potential story at some point, down the road. A lot of it has to do with the administration being unfriendly to the sector, CapEx going down, right? Like we just don't have the investment in energy infrastructure that we've had. So we're really susceptible to an upside supply shock. That said, nobody gives a shit at $68 crude oil about an upside supply shock, which is where we landed today. So we're chipping away at the bottom of the range here. And if it doesn't turn out to be one of those oversold beach balls underwater, we may sit in the 60s for a little while. But I feel like, energy likes these prices down here in the downside. It's totally discounting all global political risk to zero, which everyone knows that's probably not the real number. And we're just going to see how it pans out. I'm still a fan of energy stocks for the long term. I do think that under a potential Trump administration that they can really, really flourish. And just technically speaking, it's a bull market still off of the 2015 oil puke lows that has just consolidated for 2 years in my mind.
Yeah.
And to me, that's something that's just due to break out and then rally for 2 years. And I'm not sure what the catalyst is yet, but we'll get there eventually. That's what I think.
Yeah. Yeah. Again, this is where if you're thinking long term, and Jared, of course, is Jared Dillian, which I think many of our viewers know, and certainly not afraid to be a contrarian, which is what I love about both of you guys. But it is sort of interesting. This is, I guess, where we had some JOLTS numbers today. We're going to get a non-farm payroll number. This is where people who are watching the economy, and again, there continues to be disagreement about where this economy is, right? I hear it all the time when I hear people talking about not what the Fed will do, but what they should do. Some people screaming from the rooftops, they need to be super aggressive. They're behind the curve now. We've got this massive slowdown coming. And other people argue, not so fast. Things are still hot and there's still money around, and it doesn't feel like something that they need to be over aggressive. And in fact, there's a risk of maybe inflation flaring back up. Sounds like you maybe are in, at least with inflation, in the second part of that camp.
Yeah, I do think that we're going to have another bout with headline inflation. It's always the same way where when inflation's a problem, the Fed does this hocus pocus on the markets where they talk interest rates down, and interest rates going lower sends a deflationary impulse to the markets. The deflationary impulse gives commodity traders room and reason to whack the crap out of whatever commodity they like, base metals, grains, precious metals, and see if they come back and bark at them. So that whole deflationary story is like a big hocus pocus to me, because I don't know about you, Maggie, but my education bill hasn't gone down. I don't know what Karine Jean-Pierre is talking about, and they should hold press conferences like Rudy Havenstein said in the grocery store if they want to say that prices in the grocery store are coming down, which they are not, right? So like none of our real costs are coming down. What the Fed did was trick the market into believing that 9% inflation is now 2% inflation again, right? All the underlying sparks are there for inflation to take off.
Yeah.
We have no strategic petroleum reserve, right? Inventories are low. We have susceptible to an upside spike in terms of production. And that once that catalyst ignites, that's the thing that'll change the markets. So,
Man, I got a football player in the house. I live in the grocery store, and I can tell you, it's like it's shocking still. And when prices go up, it's awfully hard to get them down. It's awfully hard to get them back down.
Well, exactly. They go up, they go up and they stay up, and then prices back off, and then your grocery bill is like still people coming into the store paying us $5 for a can of Coke.
Exactly. So maybe maybe our consumer staples come back in because someone, they're keeping that margin. Yeah. So we have a question on gold. Joseph asking, you touched on commodities, but does Tony still see a grind up on gold to 3K-ish?
It's my biggest position. I've had a lot of gold on the pad for a while. It's been on my view matrix for years. When I told my clients that when I got out of the S&P, I was not going to sit in cash. I was going to sit in gold. And that's the move that I made back in June. I sold stocks. I added to my gold position. Then it broke out through 2,500, which is pretty cool. And to me, gold is still very much a bull market, slow-moving bull market in motion, accurately reflecting fiat currencies getting burnt to the ground with, the West's enormous debt limit that's only going to get worse, it seems like, under whatever president we have next. And so we've always got that battle to fight. And the only thing you can do, Maggie, is make moves in the markets, right? And the moves that I make that make me sleep better at night through this inflationary phase, through this period of market volatility, is having gold. And for whatever reason, right or wrong, maybe because I know that, we know that China's buying it and other central banks are buying it technically, and it's in great shape. I don't ever wake up in the middle of the night wondering, oh my God, did gold just get halved? Because it's not happening,
Yeah, that's one thing you could say, right? And for all those, we have long talked to people who have been watching gold as you have, and it does seem like, it's really sort of finally that some of those forecasts are coming to be, and safe havens might be, something that we all have to think more about in a way we really haven't when we had, a runaway train on technology, for sure. Yeah. I just want to share, Christopher, who's always wonderful about sharing his vast and long knowledge in the market, mentioned good insider buying in energy. Note recent $43 million purchase of CRK by Jerry Jones, owner of the Dallas Cowboys. So lots of people keeping an eye on energy, especially people who have the ability and the cushion to have a longer term point of view. So thank you for that, Christopher, as always. All right, guys, we're at the half-hour mark, so we're going to wrap it. But Tony, it was so great to see you. So great to be back on with you. Even though we talked a little bit in the summer, so great to be able to do it with a lot of our old friends here, for sure.
We're here to help, Maggie. I approve of what you're doing. You run a great show, and I'm here to help anytime I can.
Awesome. Thank you so much. So happy to have you as the first guest on the show, and so happy
Honored.
to see so many of you. Keep spreading the word. We're going to keep doing this. Subscribe. Hit the like button, and we're going to be with you every Monday, Wednesday, Friday for now, right? We're not trying to kill ourselves right out of the gate. We're tiny, so we're going to try to ramp up, but we've got some really fun plans ahead. So we've got an email list somewhere to jump on so that we can keep you up to date on the very latest. So do that, and I'll tweet it out and share it as well. So thanks, everybody. We will see you back here on Friday with Dale Pinkert. Coach Dale is going to be with us, so please join us then. In the meantime, as always, take care and good luck out there.